Joining us right now is Liz Everett Krisberg. She's the head of Bank of America's Institute. And Liz, the numbers were good. I think it was an increase of 1% in consumer spending in March over the drop that we saw in February. So that's great. But this data ended at the end of March, and it's been an interesting couple of weeks since then.
It's been an interesting time since then. But you're right. We did see consumers across the U.S. continuing to spend in March. But the question is, was that spending boosted by consumers who were trying to get ahead of tariffs because they knew tariffs were coming?
Like buying a car if you were going to wait?
Like buying a car, like buying durables, exactly. And so what we did is we looked to try and understand how much of that spending was really an increase in durable spending. Was it a pull forward? And we found some evidence of it. In terms of durables, durable spending on our card data was up 1.5% after being down in both February and January. So you did see a little bit of a pull forward there. But when you look at the ratio of kind of high-value durables in our card data to total spending, it actually declined. So a little bit of a mixed message overall. Where there was no mixed message, though, was in autos. And auto sales went up fairly significantly. But if you look at the daily data, so tariffs were announced on the 26th. We said the tariffs were going to go into place
26th of March.
On April 2nd.
Yeah.
So in those 6 days between the 26th when they were announced and the 2nd when they were going into account, our applications for vehicles, for consumer vehicle loans, was up 23% in just those 6 days.
Wow.
So we did see some evidence on the auto side of pull forward of demand. It'll be interesting to see, if we get that payback, given what has happened in the last
We're going to start
24 hours.
hearing from the big banks tomorrow on the first quarter earnings.
Right.
And we've all decided that, first quarter is probably going to be pretty good, but it doesn't really matter. What matters is the guidance and what they're telling us now. What can you kind of anticipate? What can you look for? What will you be watching from consumer spending? Because it seems like it is happening on a day-by-day basis.
Yeah.
Watching the market's massive gyrations. What have we seen before when there's big gyrations in the market?
So I think the key thing with all of this, with gyrations, with volatility, is always to go back and look at wages. How much is the consumer bringing in, and how does that relative to what they're spending? And what we saw in March in terms of wage growth is wages continue to go up for all income groups, but they're pulling back. So higher income wages, they, after 4 months of accelerating growth, pulled back about 100 basis points. So that's up 2.6%. I mean, it's still greater than their spending. But what I really pay attention to is lower income wage growth. So lower income wage growth continues to come down. It dropped another 100 basis points, up 1.4%, which is the lowest level of lower income wage growth we've seen in 8 years. Since April of 2017.
Still wage growth, though.
So it's still wage growth. It's still wage growth.
At a time when inflation has not been quite as strong, when you have a relief, at least from things like gas prices.
Relief from gas prices, but where we're not necessarily seeing relief is in services of necessities, right? So looking at rent, looking at utilities, looking at insurance, we are continuing to see inflation there.
Okay.
And when you're thinking about the lower income cohort, the percentage of their after-tax income that's going to those necessities is significantly higher.
So you could potentially be seeing a slowdown before the tariffs were introduced as part of this, too.
And we have. I mean, we've seen consumers trading down from premium grocers to value grocers. One of the other things that we saw this month was in terms of services. And services spending continues to be the big driver of spending. But there was a shift from two necessities from the nice-to-haves. So restaurant spending down, travel and tourism down, leisure down, as the consumers are shifting some of their spending towards more of the necessities.
I think next month is going to be the interesting month to watch what happened during these 8 days. And you can tell us on a day-by-day basis.
We will look at it, and we will certainly tell you all about it. The other thing that I think was really interesting, where we did see a bounce back, and we talked about this last month, D.C. in February saw a decline in spending, right, given all that was going on. So we wanted to see, was that a blip or is that a pull forward? We did see a rebound in D.C., so it's back to positive spending growth, but it is lagging other eastern cities. It is lagging the rest of the U.S. And some of that obviously has to do with increased unemployment there. When we look at our data, there was a 135% increase in households in D.C. getting unemployment income. So that's not necessarily surprising, but we are able to quantify it. They are still spending, but something we're going to keep looking out for in our data.